Hello, hello. Just wanted to test to make sure that my volume is right. If you are joining, I want to say thank you for joining. Today we will be going over year-end close. It is December and it is at the end of the year. So it is time for us to start getting these books closed and getting ready for the end of the year, getting ready to prepare for 2025, the successful 2025 that is, and to close our 2024 year. And I pray that 2024 has been successful for everyone. So I would like to, so let's just go ahead and get started. If you have any questions as we go through, I will be looking at my chat to see if anyone is watching or if we have anyone any questions. All right. So hi everyone. I pray that everyone is doing well on this Thursday morning. It is still morning. We got like 9 more minutes according to my time, and I'm in the central standard. What is it? The central location times the central time zone. That's what it is. So I pray that everyone is doing well on this Thursday morning. My morning has started off great. I'm excited to be here with you today and to share three essential tips for closing your books at year end. Whether you're a seasoned home care agency owner or just starting, these steps for closing your books at year end will ensure your financials are accurate, that you are maximizing your tax savings, and that you are starting the new year with a clear financial picture. The three key areas we will discuss today are organizing and reconciling accounts, reviewing income and expenses, and preparing for taxes. But before we get into the details, for those of you who do not know me, I'm Chavis, your home care accountant. I help home care agencies like you increase revenue by 25% or more with organized accounting and financial strategies. Okay, now let's dive into these three key areas. First, let's talk about organizing and reconciling your accounts. This is the foundation of a successful year-end close. So you would do this by starting to compare your bank statements with your accounting records. Ensure every deposit, withdrawal, and transfer is accounted for and accurate. If there's anything that doesn't match, investigate, investigate it and fix it now. I'm sorry, let me give me some of my coffee. Next, review all agency credit card statements. Unrecorded transactions can cause major issues, so log every expense. This is especially important for caregiver related purchases like travel or supplies. Finally, go through your outstanding invoices. Follow up with clients or payers who haven't settled their balances. You'll be surprised how much cash flow can go uncovered by taking the time to send reminders. I'm sorry, can be recovered by sending reminders. Once your accounts are reconciled, it's time to review your income and expenses. This step ensures your books are accurate and ready for tax filing. Make sure every income and expense is coded to the right category. Misclassifications like logging caregiver wages as supplies can create issues in your reports and tax filings. Tools like QuickBooks or Zero make this process much easier. I'm also a QuickBooks Advanced Pro Advisor. If you're looking for an accounting software like QuickBooks or need assistance with understanding how to use it, let's connect. I can help you with this. Now, if there are any payments you're certain can't won't be collected, write them off as bad debts. Not only does this clean up your books, but it's also a potential tax deduction. This is where reviewing your accounts receivable is important. Next, double check for any forgotten expenses such as caregiver mileage, office supplies, or training costs. These small deductions can add up and help reduce your taxable income. With your books clean and organized, let's shift our focus to tax preparation. This step will save you stress and ensure you're compliant. Ensure you have accurate information for W-2s and 1099s. For independent contractors, make sure all payments are logged correctly. Remember, these forms must be sent out by January the 31st. A copy goes to your client and a copy goes to the IRS. Home care agencies have unique deductions like mileage, caregiver supplies, and training expenses. Capture every deduction you qualify for to lower your taxable liability. Now, when closing out the year, be sure to make all necessary adjustments. For example, don't forget to depreciate your agency's assets, such as a home the agency owns that is used for your group home services, or vehicles owned by your home care agency. These are depreciable assets, and the depreciation expense will lower your net income, which in turn reduces your taxable liability. Now, other important adjustments to consider and include are your credit card and loan interest. I usually make these adjustments monthly on my clients' books. This way, my clients can get a clear picture of their monthly net income and not have a large adjustment at the end of the year. Let's see if we have any questions. No questions as of now that I can see. Now let's recap. To recap, closing your books involves reconciling your accounts, reviewing income and expenses, and preparing for taxes. These steps not only simplify tax season, but also set you up for success in the near year. In the new year, in the near year. It is really near. It is near, but in the new year. If you need help with bookkeeping, year-end closing, or tax prep, reach out to me. I specialize in helping home care agency like yours maximize cash flow and streamline operations. Let's connect. Thank you for joining me today. If you found this information helpful, don't forget to subscribe, to like, share, and follow for more tips tailored to home care agencies. See you next time. And as always, wishing you much success in your business. Thank you.